volatility. We may have a bounce back today. Nothing has fundamentally changed in the overall economy. Nothing has fundamentally changed in the fears that we have of trade wars and inflation. It's just the market chose this time to sell off. And once you have sell-offs, the algorithms from the computers kick in and sell-off begets selling.
Can buying beget buying? Can we have one of those days? Because I was saying last night on my show, I wouldn't be surprised if the stars aligned and the conference calls go well with these banks if we were up 500 points.
You had a great conference. You had a great earnings from J.P. Morgan. I know you're going to cover it in just a minute, but it's typical of what's going on in the economy. Consumer Bank was up significantly, and you had corporate earnings were boosted by the corporate tax cut. So, yes, buying could get buying.
Joel, your thoughts?
I agree completely with your sentiment. I mean, you go back the last 30, 40 years, generally after a week after the day we had just recently, markets go up 5% the following week. They go up 27% the 1 year after. So I agree with you. I think we've got a buying opportunity. This could be an early Christmas present for investors.
You know, these guys are spot on because here, broad zoom, we had zero volatility last year. The market's run up, I think it's tripled since the financial collapse. These kinds of downdrafts are normal. 3 to 5 to the downside, 2 or 3 times a year, history shows in a year. So this is a normal market trading action, which we're not used to over the last 8 years.
You make a great
right?
point. Well, last year, for instance, we definitely, were so complacent with respect to the idyllic nature of the market. Every day it was up. Every day the volume was reasonable. And it was just a beautiful time. Now, we have experienced bouts of it this year, Lauren, but we still, I think, needed maybe a wake-up call.
A wake-up call indeed, and we have the midterm elections upon us. So October, historically, the most volatile month of the entire year, coupled with an election just a couple of days later. I don't know. I don't think we've hit bottom just yet in the stock market. And with the earnings reports upon us, especially from those big technology companies, the high-flying sector, we start to hear from them how all of these major geopolitical issues, interest rates and the like are affecting them. I don't know.
It's going to be interesting, though, because they've come down so much that the dynamics have changed, the PE ratios, the PEG ratios and everything. Maybe expectations don't have to be blown away like they normally would. Want to talk about the earnings, though, because these big banks did report earnings before the bell this morning. Typically, they now set the tone for the earnings season. Let's talk about that. We got 54 names, 54 big names reporting next week, John. I think we all know that they're going to be great, right? Expectations are that they're going to be great. But now we run into this big obstacle of guidance, particularly comparisons to the amazing year that we saw with earnings and revenue growth.
Yeah, it's all about guidance right now. Earnings show to be up about 19% this quarter, which is a huge gain. It was
particularly after the last 2 quarters.
That's right. Well, both 20% growth. I mean, this is incredible to have this in this late stage of a bull market. I think the difference is in 2001, when the bull market ended, you had the tax cuts, and later in the 2002, GDP went to 3.8% in 2004. This time we got the tax cuts before the bull market ended. I think that's why we're seeing the extension. And the point here is guidance. When Jamie Dimon comes out and says he sees some geopolitical uncertainties, we all see that. We're all talking about that. But he also sees the economy is on sure footing right now. And to me, that's the most important part.
Mm-hmm. Joel?
Well, of the issues that currently are being discussed, inflation, interest rate, unemployment, trade wars, and profits, I'm not worried about the first 3. I think interest rates, you go back the last 70 years, 72% of the time, interest rates have been much higher than what they currently are, 2.25%. With inflation, I'm not worried about that. With unemployment, I'm not worried about that. We've got $3 trillion in M&A activity, which is going to keep unemployment in check. The 2 key issues, as I see it, are the trade war with China and the corporate profits, which you've just alluded to. Now, when we talk about corporate profits, we've looked over every single earnings transcript for the last month for those who reported corporate profits. Those that announced China tariffs as an issue, those dropped about 9% and almost about double the benchmark. So I think if we focus on those companies that are exposed, which are primarily the industrials, materials, a handful of healthcare companies that are exposed to the China trade wars, those are the ones we should focus on. This is going to be a stock pickers market.
When you say focus on them as potential buys or avoid them?
No, it's going to be both. I think we're going to see companies that benefit from the trade wars. They're going to be net buyers. So there's going to be a lot of winners and losers. We're going to see, going back to your earlier comments too, this is a volatile month. You're going to see lots of winners, lots of losers here. It's not going to be plain vanilla. It's not going to be everything fits everybody.
Is the thing to watch is when they start breaking down below the 200-day moving average, right? I think the Dow did that. The last 7 breaks were false alarms because the market did scale back up. So that's historically when you have it staying down below. it's because recession is triggering a bear market. We see pretty strong fundamentals coming in right now.
Well, I think the overhang is trade, as the guest was saying, and I think the reason that Asia was so strong today was because of this expected meeting, maybe progress, at least they're talking more, between President Trump and the Chinese leader Xi Jinping. That's why Asia was up today.
Yeah, well, let's not forget that Shanghai is down 50% from its 2015 high, and it's down a lot this year. So they're so oversold. I agree. I mean, listen, we had a stealth rally. March 22nd and March 23rd is when the trade war began. The Dow rallied 3,600 points, and every day on TV, people said the market was afraid of the trade war. The market wasn't afraid. Investment professionals are afraid, and some obviously CEOs are anxious about it. But this announcement that perhaps this meeting is going to happen is critical, right? Because we don't need resolution right away, but I think we need to know that they're working toward resolution.
I think we do, and I think it's very important if President Trump meets with President Xi. I think that could possibly get something done. The problem is, I think right now the U.S., the team we've sent over there, has overestimated our hand in China. I think China has overestimated their hand for us. GDP in China was up in July and August, and you actually had exports that were up. Now, a lot of that was getting ahead of the tariffs.
Right, exactly.
But they're not starting to feel this yet. And so until they start to feel this, we don't really have a great position.
The People's Bank of China has loosened so much money, hundreds of billions of dollars.
$175 billion.
That was in the last round. Before they loosened either. And also, if you look at things happening internally, I think they're in bad shape.
If they're in bad shape, though, I don't think it's because of these tariffs. I think we're coming to the same.
That's why I mentioned 2015, because if you look, I think they were already in bad shape. I think that this tariff war reveals that they're not the nation that we think they are. They're building ghost cities that nobody lives in, and it looks good for GDP, but in reality, it's more debt, and it could become a ticking time bomb.
I agree, but the problem that we have is if we think these tariffs are going to get us to a solution, I don't think the tariffs are one of the ones that are going to get us to that solution. I think we're both becoming entrenched, and I don't see an off-ramp with China right now. I don't see a way there. We're talking about the midterms. They're talking about a century of humiliation and getting the Silk Road built by 2049. We're talking about two completely different
By the way,
things.
on that Silk Road, a month ago, Malaysia turned down $22 billion. Pakistan turned down $2 billion. Last year, they turned down $14 billion.
Turning down what? What do you mean turned down?
Money from China to build the Silk Road, because now many countries are realizing, hey, you're not helping us. This isn't an investment. You are ripping us off. A great article today, too, about how they are colonizing Africa. So I think countries around the world are waking up to this belt and suspender thing, the reverse Marco Polo, if you will. But, Joel, what gets us through this? Like, what breaks this out? What gets us back?
I think it's going to be corporate profits, corporate earnings. We're going to see in the next few weeks as companies start to announce third quarter profits. This is really going to be a game changer. I mean, we saw major correction in the last week or so where we came off the October 3rd highs. And so traditionally, I mean, the U.S. small cap growth, which year to date are currently 7.85%. They dropped in half in the last couple of weeks. I mean, these companies went up early this year because they had strong profits. Is there a signal, like if someone's
watching, Joel, and they can't listen to every conference call like you and your team did? Is there a signal out there, maybe a numeric signal on the Dow or something that will say, okay, to the mass audience, maybe the worst is over for now?
I think the worst is over. I mean, again, you go back the last 30, 40 years, these types of corrections usually are followed in the following week, which we may see starting today, and the following year certainly. And there's only been about 3 exceptions out of the top 20 big drops in the last 40 years. Okay. So traditionally, and we have great interest rates right now, great low inflation, strong profits. Fundamentally, the reason why the markets went up this year so far in many of our U.S. Growth areas is because of profits. And I think in the next couple of weeks, we're going to see profits coming out and be strong.
Ultimately, profits, they say that's what it's all about. That's what drives markets. Thank you all very much. I want to get to Hurricane Michael because it's still